Hi everyone, it's Mike from Order Flows and welcome to the Order Flow Dynamics course, Module 11, on how to use order flow to let winners run. And letting winning trades run is easier said than done. And the reason it's so difficult is because traders have to fight against time in the sense that we are often impatient. And honestly, there's a bit of psychology at play, as no one likes to have losing trades, so we're often inclined to close a winning trade earlier than we should. This also explains why we hold on to losers longer than we should, because closing the losing trade would result in a loser, and we'd rather hope and pray that the market comes back, but often it doesn't. In the earlier modules, I talked about the risk of time, and a trader must be monitoring the current market situation and ask, is the order flow continuing in the direction of the reason for getting into the trade? Has the order flow changed direction? Has it gone neutral, bullish to bearish, or bearish to bullish? Is the market doing what is expected to, or is it behaving differently? These are questions you guys always have to be asking when you're in a trade. And in trade analysis, when you're in a trade, you must monitor it in order to maximize it, right? Is the trade working as planned or not? Is the trade moving towards the target? How close is it? Is the trade moving towards the stop? How close is it? How long has the trade been on? Did the trade get close to the target then back off? Should you get out early? Active trade management and analysis while in a trade will allow you to make adjustments to help your bottom line. So, for example, okay, here is the bonds, right? We put in our low, we got a nice ratio and divergence. We rally up, all right? Then we got a bearish prominent point of control. Now remember, I've said, reversals don't happen on just one bar. You need to watch the surrounding order flow for it to be confirmed. And is there anything beyond this one bar with the prominent point of control in it? No. The next bar turns back up. We even make a higher high. Then it starts coming back down. We put in a bullish prominent point of control. Okay, then the market ticks up by a tick, comes right back down to that prominent point of control. Should you be getting out of this trade or not? Think about it. What do you see? Is it turned from bullish to bearish, or is it just going sideways, right? Is it rotating? Is it going horizontal right now? That's what you got to be asking yourself whenever you're in a trade. You don't just stop. Oh my gosh, I got one bearish bar, I got to get out, right? That's panicking. If there was more to this bearish order flow, then yeah, you could get out. But right now, it's not giving you enough signs to get out. In fact, we put in another bullish prominent point of control. This is the chart right here, where you see the ratio of 30.29. It's right here. This is how it unfolded, right? Next bar, you got that red candle down, but then the next bar, you got another bullish prominent point of control at that same level. You got a double bottom. You've got a small print, 3. You've got 2 buying imbalances, right? It's not bearish. Okay, the market is just rotating sideways, right? We put in our high, we pull back, and we continue back up. So don't be anxious, right? Traders tend to be anxious. They want the market to move and to move now. Okay. However, with the order flow, it's prudent to wait for the order flow to play out, right? I know that when I get into a trade, I expect the trade to work out sooner rather than later. And if the trade is working out and there's just one bar that comes in that's sort of opposite, contrary to the trend, I don't start freaking out and panicking. Oh my gosh, this is it. This is the end of the trend. The market can pause, right? The market could be put in a rotation. You got to be understanding that. So if you're looking for market weakness or strength, while it may appear in one bar initially, in order to sell off, there needs to be signs of continued weakness, right? Just as if you're expecting the market to rally, there needs to be signs of continued strength coming through. That's why we often see lows being put in and people thinking, oh, this is the low, and they buy it, and then the market just goes sideways because there's no strength in that low that would help propel the market back up, right? For a market to start moving back up off a low, you need to see signs in the order flow. All right, so the reason I put up this chart is because this is a type of trade that I often like to take, where I see declining delta and then a big surge in delta plus multiple imbalances. So you got minus 248, minus 118, minus 40 in the delta right here as we're going sideways. And then obviously the big jump in delta to 682, multiple buying imbalances. Then the market starts going up, right? Yeah, that's what you like, right? However, if you start seeing the order flow, what do you get? You got your swing high here. You got positive delta, 73. Okay. And then you go inside, right? Anytime I have a swing high or swing low, and then we go inside, that to me is the first warning sign. Okay. Second warning sign, I got a small delta, -9. You know, it's not time to panic yet. We still got a higher point of control than the previous bar. So, you know, -9 I would treat as neutral. Then the next bar comes in, delta -99. Okay, so went from -9 to -99. A red bar, lower point of control. Now, it closed in the middle of the range of the bar. You know, it closed right on the point of control, but it's not looking good at this point. You know, so being long somewhere in here around the 533 area, you know, we're sort of back to break even at 533. That's not looking too good. You know, my stop is probably somewhere down here around 531. Then the next bar comes in, boom, lower point of control, big negative delta, -191, double what it was earlier. Point of control towards the bottom, I see a small print up here. At this point, okay, you got to cut that loss, right? You got to cut that loss before it gets out of hand, well, and stops you out, right? Why should you let the market stop you out if what you're seeing in the order flow is very negative, right? What you're actually seeing in the order flow, this is setting up to be a short trade. You know, you're long. For some traders, it's hard to be long and then turn and get short. And for other traders, it's very easy because they implement sort of a stop and reversal format. But, you know, at a minimum, after being long, you got to get out at this point. You know, 532, you're getting out 1 cent ahead of, you know, where your stop is. And how'd the market react? Boom, it just sold straight off from the 532 area all the way down to 525. Now, what makes order flow important is because what happens after you place your trade determines the direction of the market, right? Buyers or sellers are the ones who will move the market after you are in a trade. The market's not going to move based on you placing an order, right? Based on you getting in a position. The market doesn't care what you just did, right? The market cares about what's going on right now. And this is, you know, a decision traders have to face, okay? You have a prominent point of control down here at the low of the day. You've got a ratio, you've got a divergence, right? Very bullish. You get into the trade, okay? You get in around, you know, the 38.65 area, and then it just goes sideways. Okay, where's your stop on a trade like this? Well, your stop is right below the low. Market starts coming down towards your low, right? Would I get out anywhere in here? No, we still got, you know, even though the delta is negative, -12, -19, -3, it's not a strong negative number in the sense it's not -120, it's not -190, it's not minus, you know, 85. It's just, you know, 12, 19, and 3. It's kind of small. Then you start putting in some nice positive deltas, 73 and 33. Okay, you got 5 and 12 in there, which is kind of small. Then it starts heading down, -25, -105, red bar, lower points of control. Okay, this is a trade that, you know, I got to let play out. Right, I don't see anything overly bearish yet. You know, maybe by the time this bar closes, it might be very bearish. But at that time this bar closes, we might take out that low and stop me out. Okay, fine. You know, I gotta live with that. And I do know I gotta stop in here around the 53 area. What happens? Market comes right down within a tick of stopping me out, and then reverses, and then makes the move. You know, that's why I say difficult decision is because, yeah, you're coming closer to your stop price. Okay, you had, this is a 5-minute chart, so you had, you know, a half hour for the market to move. Then it starts coming back down to your stop price. There's times where I've cut a trade like this, you know, 10 ticks above my stop price, you know, maybe around the 63 area right here, just to, you know, limit the damage, right? Because I know that oftentimes if I let it come in here, it's going to keep going down, right? So there's times, like I said, I take the stop, and then the market does this, turns around, goes back up. There's other times where I'll let it run. It's not set in stone. When you're managing your trades by yourself, these are decisions that you got to face all the time. You know, this is a case where it worked out and put in a nice rally right off that low after touching that low. But again, had I gotten out early, I would notice I got a triple bottom from the last two bottoms. It's 97 versus 17. That's also bullish. Okay. And then I see the buying come back in here, here, here. So, even if initially I got in somewhere around 65, I take my loss, around 60, 63, 62, even 60. Even in this bar here at 60, I lose 5 ticks. Okay, it's not the end of the world. But then I start seeing what's happening in the order flow is bullish again. You go from minus 10 to 60 to 127. Even here, 152. So there's plenty of time to get back into this trade. I don't want to say, you could get back in right here at 65 where you were in from earlier. I know some of my followers, they have this re-entry where if they get stopped out, then they'll get long on a re-entry at the same price as long as the market starts coming back up. That's something you could also think about. But even if you're getting long up here at 75, this is a new trade here. Okay, so you take your 6 ticks, 5 tick loss, and you wait for the next trade. Right? That's why cutting your losses low sort of keeps you sane. If instead of having, you cut it here at 5 ticks as opposed to cutting it down here at, 13, 16 ticks, then you're back up here, back up at 80, you buy it again. It goes from 80 all the way up to 00, 3,900. So you had your loss small and you caught the second trade. Hopefully you could have caught it a little bit earlier back around the 60s. But even if you caught it up here at 80, right, you lose 5, 6 ticks, but you make back, over 20 ticks on the next move, right? That's the importance of keeping your losses small. But again, you get down in here, it's going to be tricky for some of you because you're going to want to cut it as you're getting close to your stop. Cancel if close. There's a cover if close, cancel if close. But, if you waited, okay, you didn't get stopped out and the market went up. If you got out, watch what's happening in the order flow. You can get back in either at your same entry or based on what's happening in the order flow at a little higher. Okay, so at the end of the day, coming out of this time period, the 4 to 7 a.m. period, yeah, you had a loss, but you also had a nice winner. Okay. Now, here's a trade, right? It's the E-minis. Get long, right? This is a trade I get long on all the time. I've got a double bottom. I've got bullish prominent point of control. Earlier I had a ratio. And I'm looking to get long, around the 31, 38, 38 and a half area. Okay, for the move higher, right? I'm looking all the way up into the 48s, the area where we just were. But what happens after you get into the trade, right? Next 2 bars up, right? That's what you like to see. You go from 26 delta to 290 to 200. Then the market just falls over. You get stopped out. Okay, it happens, right? Like I was explaining earlier on this previous trade. It came right very close to your stop. Could have stopped you out. You could have got earlier. You could have done 3 things. 1, you could have been stopped out. 1, you could have got out early. Or 2, you could have done nothing. Right? There's nothing wrong with any 3 of those. This one, you're just going to get stopped out, period. I mean, there's nothing you can do about it. Right? That's how, the market is very bullish, but then boom, something changes. This is happening right around the 9 o'clock, so there's probably some 9 o'clock number that came out that changed everything and boom, wiped you out. Okay, you got stopped out. Deal with it and move on to the next trade. Okay. Here we've got, we got the swing low, we got a buying imbalance, we got a couple 0 prints in this bar, we've got multiple imbalances. Yeah, I'd be looking to get long. As soon as I get long, what happens? We put in a bearish bar with a bearish prominent point of control. Okay, well, look at the order flow. What do we know? Well, I know that I've got these 0 prints here. I've got the stack buying imbalance right here. Let me see how this bar plays out, right? I just got long, at 51 and a quarter, and we moved up to 2.5 pretty quick. So, I was in the money for 15 seconds before the market reversed and turned around and came back down to 49 and 3/4. So, a winner went into a loser, right? Do I panic yet? No, you got to wait to see. I know I have this area in here, right? This 49 to 49 and a half area that I got to watch what happens if we start trading into that. Then the next bar opens up and we trade right back up to 51 and a quarter. Okay, maybe I dodged a bullet, maybe I didn't. Next bar, boom, we take out that prominent point of control, and we got higher point of control, and I get that move back up into the 50s, the high 50s, 55, 56, 57, right up in here where we start going sideways. So don't panic on one bearish bar. It's easy to panic, all right? Oh my gosh, this is the end of the world. We've got a bearish prominent point of control. I just got long. I got to cut it. I can't deal with it. I don't want to get stopped out. All right. So here we just had a nice little rally up. Okay. What are you going to do? Right now we're putting in a horizontal move. Okay. You're long from down here at the swing low. Do you get out up here? Okay. Well, what do you have in the deltas? First place to look for me is deltas. 47, 11, 9, 40. Very small deltas, right? Normally you're putting in 300, 200, 700, 200, 200, 120, 1300. Then you just got 47, 11, 9, 40. It's kind of small. Okay, next step. I'll look at the points of controls. Okay, we got 5 bars, 3 points of controls at one level, 1 a tick higher, 1 2 ticks higher. Okay, it's kind of putting in this value area over these 5 bars around the 54 3/4, 55 area. Okay, and it's still higher than the last push up. We had one here at 53, one here at 54.5, and it's still sort of stabilized right here. So at this point, market could either sell off or it could probably go higher. I don't know. Right? I got to watch what's happening in the order flow. If it starts taking out, this point of control, closing below it, then obviously this point of control, assuming I'm long from somewhere down here around the 50, 51 area. I've got this area around here, worst case scenario, around 53. Well, not worst case, but the scenario that if we're going to break this prominent point of control or this prominent point of control, or this prominent point of control, but this is not a prominent point of control, yeah, I would think about booking my profits. Okay. So what happens? Boom. It's going to break out to the upside, right? There wasn't any solid reason in here to get out. Now, I know some people are going to be like, well, we're going sideways. Yeah, I'll just get out now. Okay. I don't want to say there's no harm in that, but instead there actually is, this thought that, well, why are you getting out? I mean, oftentimes, people will want to get out because, I just don't know. But if you're looking at what's happening in the order flow, there's no reason for you to be getting out of that trade. Not yet, at least. Nothing bearish. I mean, you got -9, -40, but okay. But you're still lining up those points of controls. You're not closing on your low of the bar. Then the next bar comes in. Nice stacked buying imbalance in there. You got 5 buying imbalances. And the buying reappears. Obviously, you got delta 590. Max delta 767. Min delta is just 43. Okay, so you could squeeze more out of it, right? Similar thing up in here. Do you want to get out? You're lining up the points of control all at that same level. So you're just going to be moving your stop a bit higher. Okay, so you can get more out of that trade than just getting out. And because I've been in this trade, there's no more reason, because time is decaying. I don't want to be in this trade anymore. No, you don't need to do that. All right, so here we hit new highs. Okay, and you're getting long at these new highs. In this case, getting long going into the new highs rather. What do? Right, you got a divergence here, right here on the end. You don't have a ratio. You got negative delta. You got a big red bar down. You sort of close on that low point of control in that red bar. Points of control here, they're kind of right around the 61 3/4 area. You got 2 above it, 1 below it. So you can sort of average it right around there. It's putting in some volume. You got a buying imbalance there on the red candle. Maybe someone's offering out supply. What do you want to do? You want to get out or not? This is a decision you got to be making. Well, you have the stack buying imbalance. Okay, what you want to do is wait to see, are we going to start rotating into this imbalance or not? Okay, to me, that's going to be the answer on this part. Okay, so what happens? You don't. It just starts reversing back up and making new highs. Okay, then you get up to the new highs. What are you going to do? It's tricky up here, right? It's kind of scattered. You look at these points of controls. It starts out higher here, then it comes in lower, a little bit lower, then a little bit higher. Right? You got a divergence. You got a divergence. Okay, so you got two divergences. You know, if we're going to have a divergence here, if we're going to rotate back up, take out this high at 5 3/4, yeah, we could probably go higher. Now, look at the deltas. What do you got? Minus 29, minus 900. 0, okay, minus 47, minus 384, plus 180. Minus 246, 18. Minus 198, minus 186, plus 186. Minus 211, plus 65, minus 319. So 1, 2, 3, 4, 5, 6 very strong negative deltas. You got 1, 2, that's kind of neutral. On the bullish side, you got a 0, that's nothing. Plus 180, plus 186. 18, 65, kind of small. So you're up here sort of going sideways. And overall, delta is neutral, right? Cumulative delta in the sense from you hit the high to where you are right now is overall negative, right? Because this one cancels out, this one cancels out, and you're looking at, basically, close to 2,000. I mean, look at the cumulative delta from this high. It's 6,200. You're over here. Cumulative delta is 4,300. So basically, you gave back about 2,000, 1,900 in the delta, right? So it's getting weaker. Now people are taking their profits. And what happens? Market starts grinding its way down. So as you start coming out of that area, keep your eye on the deltas. Keep your eye on the cumulative delta, right? In this case, the POCs are kind of jumping around. They'll like pair up 2, 2, 3, which adds to the confusion. But if you're looking at what's happening in the delta, in the cumulative delta, you could feel a little bit more confident that, yeah, we're probably not going higher. Okay, because remember, right, if you're going to go take out highs, you're generally going to be taking out highs. You're going to be looking at nice positive deltas and nice cumulative delta increasing. But instead you're seeing minus deltas, minus 300, minus 200. Okay, that's not a good sign. And you see delta, cumulative delta, gone from 6,200 to just 4,000. Right, so the trade to be taking now, if you're still in the trade, you could cover it, but you should also be thinking of getting short up here at this area. So don't get greedy. It's easier said than done, just as letting your profits run, right? It's easier said than done. We all know the saying, right, from Kenny Rogers, right? Know when to walk away, know when to run. There's going to be times the market is generous, right? Just take it and be happy. When the market's acting like a dog, basically holding on to a piece of meat, trying to give you a profit, let it go, and you'll understand when you're ever in that position. There's some trades that just boom, just work out, start moving in their direction, and oftentimes you find yourself trying to move your take profit to a new level so you can squeeze out more money out of it. But like I said, there's these times where it just goes in that direction and keeps going, that it's so fast that you get filled, right? Your take profit gets filled before you can even move anything. Okay, we all like to say, I could have got more out of this trade, but just be happy you got your target, right? Don't all of a sudden change it into something else. And when you're in a position and the market is just really struggling, right? You'll notice that sometimes the market is just really struggling to get to your take profit, even if you're in the money, and struggling. That's why there's the saying, right? There's no luck in trading. Well, there is, actually, in the sense that you could have bad luck, and the market can go within a few ticks of your take profit and boom, reverse, right? That's just unlucky, right? It's not bad analysis. Your analysis was right. You're just off by 2 ticks, okay? So don't, take what the market gives you is what I'm trying to say. Okay, here is what I talking about getting greedy. So here we have the classic ratio and divergence, right? Plus the prominent point of control at the high of the day, right up here, right? Well, the ratio of 184. You even got a small print there of 2. You got the bearish prominent point of control, and you got the divergence, right? You got the negative delta, right? So it's all lined up there, right? All the planets are aligned, and market sells off, right? It sells off from 75 all the way down to 70, and it starts going sideways, right? Now, usually on S&Ps, my initial take profit is 5 points. Okay, so it starts coming down, boom, 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 and this bar starts moving pretty fast. Okay, so I see it moving. Oh my gosh, I move my take profit from 70, down to 68.5, and then what happens? Boom, market rallies back up to 74. Right? When I see on a 1-minute chart, I see the market, put in a big move like that. I tend to want to start moving I start to get fancy, all right? And then what happens? Boom, market moves back up to 74. If I kept my 70s in there, I'd have been filled. Anyway, market moves back up to 74, and I'm sitting thinking, God, Mike, you're a stupid idiot. And then, fortunately, the market starts moving back down, and at this point, if I was at 68.5, I would move it back up to 70, okay? Get filled there at 70. If I didn't, it just starts hanging around 70. If I'm still down here at 68, right? I'm like, well, come on, it trades down to 69. Come on, 68.5. But it doesn't, right? This is a case where you don't get greedy. Put your take profit back in there, and then what happens? It starts trading back up to 73.5. The worst thing that you can do, well, it's not the worst thing. I'll show you the worst thing you can do is, by the time it starts moving up, you get filled at 72. You just gave up three points of profit, but market just keeps rallying back up and actually makes a new high, right? So if this is a classic example of turning a winner into a loser. Okay, right? If you just left your original take profit in there, fine, you got your quick 5 points, you're done. But then sometimes markets start moving pretty fast. You want to start getting fancy, right? You want to get greedy. You want to move your take profit. Okay, comes back down to your original take profit level. That's when you should have your take profit actually back in at that level, right? Don't let it start coming up here and getting out around 72.5, 73, or worse, go back up here and stop you out. I mean, at worst, at break even, you should have had a stop. You should have moved your stop to break even. But worst case, you have gotten stopped out at a loss. Fortunately, this loss wouldn't have been that big. You're talking 75.5 up to 76.5, so about a point. But you're risking a point to get 5, and then it's standing here saying, hey, come on, take your 5 points and be out of here. All right, now here, this is Bunds. We got this nice sell-off, right? You got the nice bearish point of control followed by the single print, obviously lower points of controls, and it sells off. Nice move from 30 all the way down to unchanged. That's what this yellow line is. And then it just starts going sideways. Okay, at this point, right, it depends what you're targeting. Okay, if you're targeting 30 points, you're down here at 176 even, and it just starts going sideways in here. This is where you got to start managing the trade. Okay, what's happened? Well, you got positive delta, positive delta, positive delta. Okay, you got to. This is not a surge in the pure sense, but you see delta getting stronger. Now you got to realize you're trading around unchanged, which is an important level for a lot of traders. So you got to be watching what's happening in the order flow. You have an instance of layering in here, right? A second slot imbalance. Okay, so this is a level. Okay, we hit unchanged, bounce back up at 14. You trade 14 again. You got this nice little double top, less volume. Now, again, you also have this thing that you're fighting. Do I want to get long here or cover my short and potentially get long, or do I potentially get short? Again, this is a tough decision for a lot of traders. And then what happens? Because remember, you're short from up here at 30, right? Then you get a bearish prominent point of control here, one tick higher than the high of this double top, and the market goes down, makes new lows. So there's nothing wrong with taking your profits around this 10 area, even though your target is 176 even, because you bounced here, right? And you got some strong buying coming in here. Now there's still a little bit left to this move. You could have thought of getting short once you saw this layering in, once you saw this bearish prominent point of control. Yeah, you could still take the shot after you already booked 20 22 ticks of profit, and you see this coming in here, this activity. You could still get short in here around the 06, 07, 08 area and get the other 10 ticks out of there. Okay, so this is decisions that traders have to make. Trading is not perfect in the sense that it's either always going to go to your take profit or it's always going to go to your stop loss, right? There's times you gotta take control of the wheel, so to speak. So taking profits in a monster move is enjoyable, right? We all love to take profits in monster moves because it's a big profit. But think of the movie Trading Places, right? It's a great movie on trading, actually. In the scene, at the end where the guys are covering their shorts, they're just ambivalent to prices at this point because, okay, yeah, I just made a ton of profit. I sold at the high. Now we're at our lows. Yeah, sure, I'll buy 5 from you, 10 from you, 20 from you, etc. Right? You're buying off the lows after selling at the highs. And again, this is why I love bunds, because you often get moves from the highs directly down to the lows. Right? We're coming off here. It's a nice move, right? Imagine you're getting short somewhere in here, right? You got a ratio divergence. You've got a single print. Market moves down from 42 all the way down to 20, new low. No reason to be covering your short yet, right? We come down here to 05. Okay, maybe I could think of covering it. We're trading 10, 14, but again, I'm long from 40. Or sorry, short from 40. Okay, then what do you see? You start seeing bearish point of control, bearish point of control. Yeah, okay, I got out of 2 contracts. Maybe I'm short 5, short 10. Get out of 2. Okay, let's see how this plays out here, right? Because originally your take profit was probably at the low of the day, right? Then you just see you're making the strong move down. There's no reason to take your profits yet. Then you hit a new low that you bounce up off of. Okay, but then you're starting to see some bearish order flow come in here again. So you still got maybe 2 contracts on, 3 contracts on. You let it play out. What happens? Boom, makes new lows. Hits 05, new lows, all the way down into the 90s. Even goes lower. And again, once you start hitting these lows, you got to start watching. Well, here's a ratio and divergence. Okay, maybe you take another one off here, or 2, and you hold 1 to see if we're still going to go lower, right? Or maybe you just cover it all right down here at 05. You're short from 40, and you're trading double O. Okay, fine. You take them all off here. Maybe you leave 1 on, right? What do you notice? Right, you got divergence, divergence, divergence. Maybe you just let it see, maybe there's more to this move, right? We're trading 92. Maybe you still got 1 on. What happens? Boom. Lower low, lower low, all the way down to 70. It's another 20 ticks of that move. Right? That's the monster move. So this concludes Module 11. So hopefully you understand the feeling on letting winners run. You got to read the order flow. If the order flow is still bullish and you're short, stay in the trade. If it's still bearish, stay in the trade. Right? There's no reason to get out of a trade as long as the order flow is confirming the move. Okay, I mean that's one of the whole points of using order flow is to confirm the move, to stay in a move longer, or to recognize the conditions in the market are changing. So this concludes Module 11. In Module 12, we'll discuss on putting the pieces of order flow together to better understand what's happening in the market. So I'll see you there on Module 12. Bye-bye.